Realty Nation, it's your host, Avi Golhar. Welcome to the Think Realty podcast. You know, there are days like this where I want to buy all the real estate that I can. But you know what? That means that I have to buy real estate that's not renovated and then renovate it. And then I have to do the hard work to actually get the property to a point where I'll have tenants, whether it's Section 8, whether it's a non-Section 8 tenant, maybe it's a luxury home tenant, maybe it's Airbnb. And frankly, look at me. I'm 5'5", 140 pounds, and I look better in front of a camera than doing hard work. I mean, this chair, I'm just saying, this chair is what's making this podcast right now. That being said, my good friend Zach from Rent to Retirement will be with us in just a second. We're talking about what turnkey investing can mean for somebody like me that has zero interest in doing the work that it takes to get a property rent ready. Now, seriously, I know what a sledgehammer looks like. I'm not picking that puppy up. Yeah, I go to the gym and I'll do 15-pound dumbbells because it's half off of 30 pounds. It's like a 50% discount. It just goes with my natural vibe. I'm just gonna do things that are less painful. So it makes sense to do turnkey investing. And if you're like me and you want the easy street through life, turnkey investing, seriously. Before we get to the conversation with Zach, I want to give a huge shout out to RCN Capital, who is the sponsor for today's podcast. RCN Capital is a national direct private lender that provides commercial loans for the purchase and refinance of non-owner occupied residential commercial properties. The company, RCN Capital, specializes in ground-up construction financing, short-term fix and flip financing, and long-term rental financing for real estate investors. Check them out. Go to rcncapital.com for more information. Let's get to it. Zach, welcome to the show. How are you doing, man? You ready to rock and roll?
Yeah, let's do it, Avi. Thanks for having me. Thanks for the interest. We're really excited to talk about turnkey investing and how it can be a benefit to really anyone looking to scale, diversify their portfolio, simply get started in real estate.
Yeah, or somebody that's just lazy like me. I just don't want to do any hard work, right? So why should I look to a turnkey as a solution instead of going through doing the yellow letters? So let's start there, right? I've got to do the yellow letters to find the inventory. Then I have to beat out any other investor for that inventory, for those properties. Then I have to actually sit down with the homeowner and negotiate with the homeowner. Then I have to buy the property, to line up the financing. Then I have to renovate it. It's just like this constantly, that just sounds terrible to me. Why should turnkey be a good weapon in my arsenal to use?
Absolutely. I mean, to your point, that's an active job, right? I mean, that is a full-time business, really building a business around trying to find, rehab, renovate, build properties, whatever the case is. And while that may be a benefit in the goal for many investors, I think a lot of people where real estate is really powerful, Avi, I think, is just from a simple fact of buy and hold, acquiring a portfolio that's sustainable and diversified across the country in some of the best markets to be able to obtain some sort of financial independence at some degree, at some point in time. And you do that through buy and hold real estate. If you're flipping properties, trying to find an under market valued property, that's all great. But really how you build financial independence and generational wealth is through passive income just by buying and holding rental real estate. The investors that we assist in building that are looking to, it's not just for the investor that's quote unquote lazy or doesn't want to take an active role in investing. Turnkey is a great option for people that are just getting started. They want some guidance on how to build a successful portfolio. What are the best markets to invest in? How do they structure an LLC? What are the best financing options? We take a comprehensive approach to assist them in building that business model, but it's also a great opportunity for someone to diversify their portfolio, regardless of what other investments they're doing, diversify into different markets where they can maximize their cash flow and appreciation and equity. Someone that wants to scale up quicker, we're doing all the heavy lifting and the hard work. If the cash flow numbers make sense for that investor, then it's a win-win for everyone. And I think that's a real benefit of going the turnkey route.
So the big thing to pay attention to here, guys, is cash flow, right? You are obviously going to pay a little bit of a premium because you're not doing the work. The renttoretirement.com, they're the ones that are finding the deal, they're sourcing the deal, they're making sure everything's rent ready. And for that, it's a premium. Are you going to go get a luxury scarf from Banana Republic or from Louis Vuitton? right? That's like really what it is. You're going to pay a little more for Louis Vuitton, probably not anything, probably not a whole lot from Banana Republic. I should have probably used a shoe as an example, or like a car as a better example. But it's the same thing. If you're not doing the work, expect to pay a little bit of a premium, but seriously, it's worth it in the long run, because the idea is to buy and hold these properties for the long run. If you're just going to buy and flip this in a year, year and a half, it's probably not going to make a whole lot of sense. Long term, 5, 10, 15, 20 years, long-term rentals is the key to your financial success. I want to talk about scaling the portfolio for a second, because I'm a guy that wants to have a lot of cash flow coming in the door. Tell me how I can get to $10,000 a month in passive income.
That seems to be one of the most common numbers that we hear people as their initial goal. And I think maybe just because it's a round number, but people are looking to really have some sort of retirement structure or supplemental income through rental real estate at some degree. We know, the best benefits of real estate, it really comes from just holding it over time and scaling it and letting real estate do what it does. You're growing your net worth through appreciation, using leverage and having the tenant pay the loan down for you over time, using leverage to diversify and scale your portfolio beyond just, what you would buy a property cash with, the tax benefits and depreciation, as well as the cash flow as rents go up over time. That's how you build a sustainable portfolio. I mean, it all starts with one property. So if you're a newer investor just getting started in this, it's important to take action and get into that first property, not really even financially, just mentally and emotionally. That puts you in the investor mindset. If you're already an avid investor and you have a portfolio, how do you scale up to obtain that $10,000 a month passive income? And there's multiple ways to do it. I mean, simply speaking, if you're talking about a $100,000 house that you're putting 20% down on, that's cash flowing, say, $250 a month net at the end of the day, which, I mean, we have many of those types of deals. In theory, you would have to buy 40 properties to acquire, that $10,000 a month passive income, which would, if you're just putting that 20% down, that would be $800,000. However, as we know through real estate with the tax benefits, being able to build equity over time and do a 1031 and scale portfolios, there's multiple ways that you can be creative and obtain $10,000 a month, for instance, passive income without having to just save up another down payment. The properties over time are building equity through appreciation and debt pay down. Usually over a 3 to 4 year period, you should have enough equity to be able to, and the cash flow you saved up, to be able to 1031 and double your portfolio really every 3 to 4 years. So as an example, Avi, if you were to invest $100,000 in day one and not do any other investing, let's say you bought 5 properties at $250 a month on each one of those, that would be $1,250 a month passive income. Let those properties grow through appreciation, debt pay down, save up your cash flow, take advantage of the tax benefits, let those grow in value over the next 3 to 4 years, and then do 1031 and double your portfolio. And then another 3 to 4 years, double it again. And so you can easily get to that 40 house portfolio sooner than just always saving up for that next down payment. And there's additional things. We can look at multifamily. I mean, it's important to note that rent to retirement, our company, we work across 15 different markets. We work in the single family. We have small and large multifamily. We work in commercial, office, and retail. And we also have new build and construction opportunities where someone can actually come into immediate equity. Some of the houses we're building right now around the $300,000 price point, they're appraising in that $350,000 to $400,000 price point when they're completed. That's an exceptional opportunity for someone to be creative, to do a cash out refi and pull close to all of their money, if not all of it, back out, to then refinance it. They could sell it at a gain and essentially flip it. So my point is there is a diversity of different investment opportunities that we make available to our clients, both geographically speaking, but also across different asset classes.
So I'm looking on your website right now, and I found a couple of interesting properties. And I love the state of Indiana, Ohio, Florida. I think they're all great markets. Like right off the bat, I think there are a couple. There's one that is, I'm literally on the Google Doc on your website for Indianapolis. One for right now, 14% ROI turnkey. You get $222 a month in cash flow with $27,000 down. So here in Indy, price is $137, rent's $995. It's 2-bed, 1-bath. So I probably wouldn't do that just because it's more of a transitioning family. I'm more of a 3-1, 3-2 kind of guy. But for this, it seems interesting, right? Like you would get $222 a month in potential cash flow. You have to put down $27,000. I'm assuming you have local property management, you have banking relationships that we can call on to say, hey, I'm interested in this property, I want to buy it, and I mean, the interior pictures look great. I love how you have a Google sheet with the property. Yeah, with the property financials breakdown, you're giving me a vacancy rate of 3%. Why not take that vacancy rate to say 5 or 10% out of curiosity?
I mean, you got to know what numbers you're inputting in your pro forma, right? I mean, if you're just running, say, an 8% vacancy, and you need to know what that actually means. I mean, an 8% vacancy, that would basically mean 1 month out of the year you have a vacancy. And so your tenant is turning every single year. We run our metrics. I mean, it's important for every investor to run their own numbers, of course.
Yeah.
But also important to know, following a systematic approach as we do, and having historical data to pull from, what are the averages? What would you expect? Every property is, obviously different, but our average occupancy time is between 3.5 to 4 years. Average leasing time is 18 to 21 days to turn over. So if you're looking at, you round that up to a month of vacancy over a 3 to 4 year period, that's where we're running those numbers. But go back to your initial question, Abby, about in general, turnkey. The first thing that we do is market analysis, right? We want to be invested in the areas that are going to set ourselves and our investors up for success.
Yeah.
We look for areas that have landlord-friendly legislation, low taxes, future population and economic growth, areas that are still affordable in housing prices and have high rents and high rental demand. Those are the areas in the path of progress that we want to invest in. And then we build our local teams in each one of these areas. So when we talk about turnkey, it's really a full service, comprehensive approach. We either fully renovate or build properties, so you're not having to inject capital into them and do the repairs. They should be cash flowing from day one. And then we lease and manage the property, so you really can be a passive investor to focus on the more important things, which is how do you build your business? I don't encourage anyone to go through, even if they want to flip properties, to be swinging hammers, right? Because your time is better used building your business and focusing on how to scale. We also help with a comprehensive approach of how do you build a successful and sustainable business model over time. We have real estate attorneys and CPAs that can help you with tax structures, entity structures, focusing on all the components that are necessary to build a successful business over time.
You make a good point about your calculator. Like, you want to make sure that at the end of the day, when you do your underwriting, as an investor, you're looking at the numbers, that those numbers absolutely make sense for you. I do like what you said about the 8%. You're essentially turning your tenants once a year, which isn't what you really want. You want long-term tenants.
And not typical from what we see, yeah.
Yeah, you want to be 3 to 5 years. Do your research on the neighborhoods, do your research on things. One last question for you before we kind of finish up. What separates your turnkey company from others in the market?
We have a very strong repeat business percentage. And so almost every single client that we have comes back to do business with us. And I think that speaks to basically the services that we offer, standing behind our products. We want to create long-term partnerships with our clients to help you be successful. We want you to be successful, because that means it's mutually beneficial. It means you're going to likely come back to invest with us long-term and refer other clients to us. If anyone just Googles us and looks at some public reviews and on public forums and things like this, they will easily see that we have a very strong public reputation in the turnkey space, which many companies unfortunately do not, because turnkey is a broad term a lot of people classify themselves as, whereas I think we're a full service turnkey provider. We operate in a diversity of different markets, as I mentioned before, as well as a diversity of different asset classes. And so there's a lot of different investment opportunities. We have syndications available. Someone wants to be a private money lender. And there's a lot of different options for people to invest in. We build a comprehensive approach. We're not just selling turnkey properties. We're partnering with our investors. We're helping you build a business plan. But ultimately, it's the personal approach and individualized plan and approach that we're taking with each one of our clients, I think, that truly separates us out in the industry and has allowed us to be very successful over time.
Excellent. Zach, thanks for the time, man. I really appreciate it. Going down this road for me has been always an interesting puzzle, because there are a lot of things that need to fit to make the right property, to make the right investment come true. So thanks for shedding some light on some of the markets, some thoughts on turnkey. And if you're an investor and you're thinking, well, I want to grow my portfolio, I want more cash flow. It's like, check, get in touch. Zach, you can find Zach and his team at rent2retirement.com. Not the number 2, the word, and not the number of the word, but the actual RentTO. So RentTOretirement.com. Check them out. Zach, it's been fun. Thanks so much. We'll have to have you back.
Javi, it's been a pleasure. Thank you.
Think Realty Nation, listen up. We're going to be in Houston, Texas. That was my Texan accent right there. Did you like it? Mm-hmm. Give me a high five if you liked it. It was not a Texas accent. I don't know what I'm doing with my life. Houston, Texas, March 24th, 25th. Be there. I'm going to be there. We can talk private equity, business acquisition, real estate investing, all wrapped into one. Here's what I know. Real estate investors have businesses. You have high-paying jobs. You have opportunities in front of you, and you want to buy real estate. There is a specific formula that you can use to go from your business world and start pushing some capital to pushing K1s into real estate, whether that's in a limited partnership position with a fund, or you start buying some single-family rentals, multifamily, duplexes, tris, quads, whatever. There's a really interesting formula there that I've been pretty much working for the last couple of years, and it's really worked out. And I'd love to talk about it. I'm going to be in Houston, March 24th and 25th, and so should you, because you'll learn from all the other real estate investing pros that will be there. Also, if you want a buy one, get one offer, I've got one for you. Go to thinkrealty.com/Houston. You register for 2 tickets, and you type in the code podcast. If you don't know how to spell podcast, you don't deserve a BOGO. So 2 tickets, you'll register essentially for the price of 1 by using the code word podcast. And Bob's your uncle. I'll see you in March 24th and 25th, Houston, Texas. Look at that, you get the double shooters. That's the only Texan thing that I can do. Got to give a huge shout out to the sponsor of today's podcast, RCN Capital. They're a national direct private lender that provides commercial loans for the purchase or refinance of non-owner occupied residential and commercial properties. RCN specializes in ground up construction financing, short-term fix and flip, and long-term rental financing for real estate investors. Check them out. Go to rcncapital.com for more info. Until next time, happy investing.